Alright. Good day, guys. This is a PUFX, and this is my first time of shooting video, and this is my first time of making video and posting it on YouTube. So, guys, just bear with me, please. Just bear with me in case I did. I'm not that perfect at making videos, so this is my first time. Okay, a real one, a quick one. Um, the purpose of this video is just to tell about market structure. Alright, I just want to talk more market structure, how to identify the market structure. Alright, that's what I want to emphasize on now. So, I'll be using this P as an example, GBP USD. That's what I'll be using as an example. How do you know the market structure? How do you know when the market is trending down, when it's trending up, and when it has changed direction? Alright, so let's go to GBP USD. Alright, this is GBP USD, and I'm a trend line trader. I use trend line. So straight to the point, market structure. Market structure tells you the direction of the trend. Tells you the direction of the trend. Is the market trending? Is it an uptrend or is it a downtrend? Because market structure is very important in forex. It's the market structure you look before you know maybe you are to buy or sell. If you get the market structure wrong, trust me guys, it's very high. It's like a high probability of failure in that trade. High probability of failure because if you're going against the trade, it will last. For example, if the market is trending up and you're looking for sell opportunity, the sell opportunity you're looking for won't last. Except it's not on an area of value. I'll talk about that maybe in some other videos. So market structure is very important. If you're going against the market structure, it won't last. Any signal you're taking against the market structure won't last. Because that's a pullback. It's a corrective move. A pullback, not an impulsive move. Impulsive move is the redirection of the market. Right. So how do you identify market structure? As we all know that market structure market is trading higher. Like the market is going up, it has to make higher highs and higher lows. So let me get a button here. Just to make higher heights and higher lows. Okay. What are the higher heights and higher lows? Check this out. The market is trading up, which is one move here, and make a pullback. Alright, it makes a pullback, just a short one. Then it goes up back. If it's an uptrend, it goes up. Now, for this market to continue trending higher, for it to continue to be in an uptrend, it has to break a series of higher highs. Alright, it has to break a series of higher highs. How do you know the market is trending up? By seeing higher high and higher lows. Alright, that's by taking higher highs and higher lows. Alright, just bear with me please. As time goes on, I'm going to improve. Now, okay. Now, look at this. This is an uptrend. This is an example of an uptrend. Alright, for this market to continue trading high, these higher highs, this area here, at this point here, these higher highs where this micro exchange is, this top here is an higher high. Now it makes a pullback. This pullback won't last. It's just a corrective move. Like when the market is moving, trending high, it has been working for so long, and it just needs to take a break. That's when it makes this pullback. And when it makes this pullback, for it to continue trending up, it has to break this higher highs here. This higher high, it has to break it. If the market does not break it and just reject around this higher high here, then there's a potential reversal. Yeah, the market it's there's a potential reversal that market might just come down and change its direction. So around this high here, guys, this high here, market has to break it for it to continue up. Alright. Now if it breaks this higher here, it will pull back to this level of structure here. This level of structure is called level of structure is called resistance support. It's a resistance here before it becomes support. Yes, because there's something we call support become resistance and resistance become support here. Bear with me, please. So this area here where this price break, this is the higher high where the price break. Once the price break it, then we are rest assured that yes, this price wants to continue going up. It wants to what? It wants to continue going up. So upon if the market is going up, it will still take a break again and probably take a break to that point where it's just broken, that high where it's just broken. That resistance area then will turn into support for the price to want to push over. Now, if you take it, if the price push up comes to this higher high and what and push up gives you a reversal pattern that it's going up. If you enter your trade right here, you want to take your profit around this next higher high, new higher high that was just made. Alright, you want to take a profit there because you don't know when the price is going to break what this high because price might just get to this next high and what and give you a reversal pattern and just shut down again. But now for you to have confidence that yes, this price is still going up, it has to break this high again, this new high again. So for the market to keep trading up, it has to be breaking the higher highs, just be breaking it. If the market is breaking it, then the market is still what is still going up. But whenever the market wants to change it down, like the market is ready to change its direction, I said high highs, the market has to bring the high highs here for it to what to keep going up. Now don't forget we have higher low here around this area here, this down place. We have what? We have a lower high. Sorry, we have a higher low. I'm sorry guys. We have a higher low around this area here. Because once the market makes higher high, it's what? It's pull back and make higher low. Now for the market to change its direction back to the downside, it has to break this level, this most recent higher low. It has to break the most recent one. Alright. Most recent higher low that's current to the market movement where the market is that buyer moment. Now, for example, this is the last higher high here that was broken. Now, for us to know the market is still going up, it will reverse back down to this higher high and want a push up. But for this market to change direction, it has to what? It has to break this higher low here. I don't know if you are getting it. It has to break this higher low around this area, and this is the higher low. Like I said, if a market is trending up, it has to make higher highs and higher lows. Now, for this market to change direction, it will break this higher low here. This is the higher low, guys. To break this higher low here, this is the higher low. Yeah, it will break what? It will break this higher low for it to change direction back to the downside. For it to change direction to the downside, it has to break this higher low. But if it does not break this higher low and price just did this, comes to this higher low, gives rejection and what and push up, then the market is still in what? Still in an uptrend. If it does this, the market is still in an uptrend. But if it does not, then what? Instead it breaks. Instead of rejecting around this higher, then what it breaks down. Then the market has changed into what? Into a downtrend. And what happens next is the breaks, market will often come back to this area of resistance, area of support it just broke, and what? And reverse back down, and what? And reverse back down. This is what the market usually do, right? It breaks this what? This higher low here, then it comes back, take a pullback to that area because it's an area of value. Then what? It comes down. That means the market has changed its direction. Same thing applicable to downward movement, which is the opposite of what I just said now. Alright, I don't have much time to I don't want to make this video long. So I don't know if you guys understand, but these guys take note of this. When the market is breaking structure, for it to continue going in this direction structure, it is. But if the market is ready to change direction, it has to break the most recent level of structure. That means either higher high or higher low, or lower high or lower low. For a downtrend, but for an uptrend, it makes higher high and higher low. Now it has to break the most recent level of structure. Now guys, starting from here, when the first high, which is the first higher high, naturally, first higher high was here. For this market to continue downward, it has to break this level of structure, this lower low here. This is the most recent lower low to this higher high here in the market condition, current market condition. Now, if it breaks, then we have rest of man, we are rest assured that yes, this market wants to continue going up. It retraces back down to this higher high, and still push up. Now, this is the new lower low here. For this market to change direction, it does not traces back around this higher high or this higher low. If it breaks it, then it has changed direction. Now the market does not break here, it still rejects around this high high and goes up. Now this is a new higher high here. Thus for this high high to be valid, it has to the market has to break this reverse high high. Now it has break it and this high high now is valid, and this lower low to is also valid. Alright. Now, for this market to take direction, it has to break this most recent level of structure, which is the most recent higher here, not the next one, not this one, but this one, the most recent one here. That's what it has to break it. Now, the market breaks it, the market has what changed its direction to the world to the opposite, which is the downtrend. So this exactly happens is applicable to the downside, to the downward movement, which is a downtrend, but this is an uptrend. I hope you guys understand me. So let me just show you in the chart. This what I've explained. Let me just show you how it looks in the chart. Alright. Alright, let me see. Let's see. Okay, now this is the 4 hour time frame. Now, the reason I'm using the 4 hour time frame now is because the 4 hour time frame, which is one of the higher time frame, it gives a high probability trade, like a high, it gives you accurate, let me say, it gives you accurate thing about the market condition because as we all know in the lower time frame there are noises, full of noises, the 1 minute, 5 minute, 15 minutes, full of noises, in the 1 hour too, full of noises. Alright. But the higher time frame like the weekly, the daily, the 4 hour, it gives you what? It gives you the accurate news, the accurate signals that yeah, this market is about to change direction or not. So you can't be following the lower time frame to use it to judge the higher time frame. No, you use what happens in the higher time frame once to what to judge the one in the lower time frame. There's something called multi-time frame analysis, and that's very good. But I'm not going into there today. Maybe in another video I'm going to explain about multi-time frames, how to treat multi-time frames, like using multiple time frames. It's very okay. So higher time frame have the high probability of what of law of changing market. Like market has high, for example, now if you see the series of higher highs and higher lows in downtrend, if you see a series of higher highs and higher lows in the lower time frame, that is an uptrend. The overall market direction in the higher time frame might be in a downtrend, and that uptrend you're seeing in the lower time frame might just be a pullback, and it won't last. So when it gets that uptrend, the higher and higher low uptrend gets into an area of value in the higher time frame, it changes direction. It changes direction. Then that's when it breaks the structure in the lower time frame. So when it breaks structure in the lower time frame, then the lower time frame must correspond with the higher time frame, because the higher time frame has triggered to an area of value for it to continue in its new direction. So let me just show you the series of highs and high highs and high here now. Let me use this. Okay, this is a downtrend. Alright, real quick. Now this market has been trending from here. Alright, let's bear with me guys, please. Come here. Now look at this. This market has been trending downward here. Let's start from here. I'm using a downtrend as an example. This market has been trending down from here. It gets to this level. Then what happens? It retraces. It retraces. Take a break to this place. Then what? Then come down again. Now for this market to still go in a downtrend, it has to break this what? It has to break this lower high, lower low here. Rather, this lower low here, it has to break it. Alright. And as you can see, the market breaks the lower low here. This is the lower low here. Alright. This is the lower low here. I paint it, refill it. So, um, just give me a few minutes. So here. Now this is the lower low here. This area now is the what? Is the lower low. Now for this market to continue down, it has to break this lower low, and as you can see, it breaks it. This is lower low here. So it breaks the lower low here. And now when it breaks it, what did the market do? The market will it retraces back to the upside, but this buy is not what? Does not last. This buy does not last, as you can see. The buy does not last, and what happened again? The market still wants to go to the downside, and boom, you can see it traces back down. Now when it traces back down, it wants to know that yes, this market is still in a downtrend. Alright, market just has to retrace back to an area of value where potential reversal occurs. Now you also check where is our area of value here. This is what? This is the lower low, but this is the lower high. As you can see, the market retraces back to the lower high. As you can see here, it traces back to the lower high. Then what happened? It gives you reversal signal. You enter for a short. Then expecting the market to break this what? To break this lower low here. Expecting the market to break this lower low here, but the market didn't break it. Now, because this is what I'm talking about, the market didn't break this lower low here. Instead, what did it did? It comes back to this lower low here, then traces back up. It does happens. It traces back up here. Yeah, I want to use this arrow so you can understand what I'm talking about. Can you see it traces back up here? But when it traces back up here, you can see here that it didn't break this wood, this lower high here for it to change direction. It didn't break this lower high here. Assuming this market just push up around this place, breaks this lower high here, then this market has changed direction because this is most recent level structure. This is the most recent one. Yeah, the most recent one here. This is the most recent level of structure of the lower high. Alright, this is the most recent level of structure of the lower high. This thing, if market didn't break this lower high, it traces back to this lower high, then what then shut down again because it's not ready to go to the upside. As you can see, market is not ready to go to the upside here. And now for us to know, for us to be sure that this market is still what in a downtrend, it breaks this lower low. Can you see? Break this level, this lower low here. As you can see, the market was break this lower low. Now let's check back. Then we go down. This market is trending downwards from this arrow here. It's trending down. Now it's take a break to the upside, but as you can see, the up trend didn't last because that's not the reason. This market has been trading up since this for a while. It has been trading up, 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 up. I'm not talking about. I don't want to go into details about this because I don't want this video to be long. So let's just start from here, which is what the downward movement. We'll talk about the up, the uptrend, the up movement. Permits me. Alright, just go through this very well. You understand what I'm talking about. Now, the market has been trading down. It's take a break, but this buy didn't last. Alright, then when it reaches an area of value, it's breakdown, it's reverse, it reverses. Now, area of value, as I said, I'm going to talk about that maybe in another video. Alright, now this is an area of value. This is an area of value. You have to always with Fibonacci retracement, use Fibonacci retracement. Area of value, either support or resistance. Alright. As can this is an area of value. This is the magnitude is at 0.5%. In between 0.5% and 0.6 or 8%. That's an area of value. Alright, an area of value. But I'm not going to details about that. So market decreases back down from there. That's an area of value. Then for it to continue the downward movement, reach this lower low here. This is the lower low I'm talking about. Alright. This is the lower low I'm talking about. Yeah, this area here, this place. Yeah, that's the lower low I'm talking about. Now it breaks this lower low. When it breaks this lower low, for it to continue to the downside, it rolls up, increases a little bit, but it don't last longer. Then what happens? It breaks it again. As you can see, it breaks it. Look at this arrow here. Not this. Yeah, this one. It breaks it. Now when it breaks this lower low here, now this place is the new lower low. This area here is the new lower low. Yeah. When it breaks this place, this is the new lower low. Because that's the most recent level of structure there. It's the most recent level of structure. Now, when it breaks that lower low, you should be expecting is that it should come for a break, go for a break, but a retracement. Now when it retraces back to this one, to this lower low here, because it's an area of value. Alright, area of value is where potential hazard occurs. It's a place where potential hazard will occur, like support and resistance. It's an area of value. Alright, it retraces back to this area of value, the new lower low. Then when it gets there, what happens? It push up. Then when it gets there, what happens? It retraces back down. Alright, it retraces back down, but unable to break this lower low here. Alright, unable to break this lower low. This is a lower high on this area. Lower low, lower high, lower low. Now, lower high. We are expecting this lower high to break this lower low for it to continue in a downtrend, but it does not here. As you can see, it does not. It didn't break it. It doesn't have that strength to break it here. Right? It doesn't have the strength to break it here. Then what happens? We trace this back at this lower low, back to the upside again. Yeah, this arrow is correct. I will back to the upside. When it gets to that area of value, up, when it gets to the area of value, up, what happened? It still wants to go to the downside. It rejects around this area. If the market, this market does not reject around this area and just does this thing, then it has changed its direction because it has broken the most recent level structure, which is the lower high. Alright, and this is the lower high with a valid one. Remember the valid lower high. This is it here. Alright. Okay, so let's continue, guys. I don't know what's wrong with my trading view. I think it's network issue. So, like I was saying, I wanted to show you the most recent um lower high. Let me show you right now. This is the most recent level of lower high I was talking about here. Yeah, on this level here. Because since market didn't break this lower low here, it comes back to the lower low, rejected, goes up. Instead of it to come down indirect, it does not. It goes up to this area of value, which is the recent lower low around this area, comes back to it before going down. But if the market did not do that and just comes, if the market still comes back to this lower high here and it's what rejected to the downside, like it rejects to the downside around this lower high here, it rejects down, we're still in a downtrend. But if this market should break this, there's a potential that the market has changed its direction. It has what? It has changes its direction because the market does not have to break the what? The lower market does not have to break the lower high. Has to what? Respect it, then rejects it back down. But the thing is that instead it breaks, then it has changed direction. But if it does not, and the market still comes back and rejects around this lower high here, and this lower low here rather, this lower low is in here. This rectangular line I drew here, the market instead for it to reject, instead for it to reject and it does not reject, embrace this um lower high here, it has changed direction. But if the market come back to this lower low and still reject, then we still in a downtrend. Even if the market should come back to this place and still comes back to this lower low that's not yet valid, if it should come back here and this lower low that is not valid, and still reject and goes up to this lower low again, area of value, then we still in a downtrend. But the market has changed. Let me say the market is in a range. Yeah, it's a range condition now. The market is in a range. All right, that's consolidation. All right, that's consolidation. But if the market, as long as the market didn't break this lower high and this lower high here, we still in a downtrend. All right, we still in a downtrend. Now, for this market to continue a downtrend, what do I say has to happen? It has to break this most recent level of structure. This is a lower what? Lower low here. This is a lower low, but for this lower low to be valid, it has to break this structure here. Now, once it break this, then this is lower low here. Then we drop the line here on this lower low for potential reversal around this lower low, but it does not happen, and it does not happen and come back to this lower high, because when it breaks this lower low here, this lower high has been valid. This lower high here has been valid when it breaks this lower low, but if it does not and rejects around this here, it is not. This is the valid one here. But if it does break it here, then this lower high here has been valid. The market do not have to break this lower high here, because if it does break this lower high here, it has changed direction. Now I said this lower high I'm talking about here, this lower high I'm talking about here is valid because the market breaks structure here, showing that it's still going to the downside, showing that it is still what going to the downside. It breaks this lower low here. When it breaks it, then this lower high here becomes valid, because if the market should break this lower high here and this lower low at this level such as a broken, then it has changed direction, because this now has become the most recent level of structure. So I hope you guys understand what I'm talking about. Now it's still trending down, see, it didn't change direction. It goes up here, it goes up to the side, and what, as you can see, it's an area of value, and we reject this area of value to the downside. So let's see it rejects. Now this way it breaks. Let's see if it breaks structure around this area. When it breaks structure around this area, as you can see, turn back up to that area of value. So it's area of value is not area of value. It's not area of value. Changes back a little bit, then what happens? It breaks. Now, when it breaks, it breaks. Now, when it breaks this lower low here, this lower low, when it breaks this lower low, then this lower high here is valid. So the market made a series of lower highs and lower lows, while an uptrend makes series of higher highs and higher lows. Now, when the market broke this structure, this lower low here, then this lower high here has been valid. For the market to change direction, it has to what? It has to break this what? This it has to what? It has to break this lower high here. As you can see, this is the lower high. The most recent one I'm talking about is the most recent lower high here. This is the most recent what? Lower high here. The one that looks like a blue light here. Yeah, this is the most recent one. Because what this lower low here has been broken, then this confirms that this lower high here is valid. Now, if the market does not break this lower high here, and instead it comes back to this lower high, and what rejects down, it's still in a downtrend. Still in a downtrend, but the market didn't do that. It just comes to an area of value to this lower low, this small lower low here, this small lower low here. This small lower low, it comes to this lower low, and what happens? It makes it traces back down again. Let's see, traces back down, see to this area, then traces back up, traces back down, and it's continue making its moves till this market condition right here. So this way, I'm going to use this stop for today. As you can see, right, the market is making series of lower highs, lower low, lower high, lower low, lower high, lower low, and it didn't break any level. It didn't break the lower high because in a downtrend, let me say this, in a downtrend, when the market is making series of lower highs and lower low, but the market is change direction, it has to break the most recent level of lower high. If it breaks it in a downtrend, it has changed direction into an uptrend. Then, on an uptrend, making whereby the market is making a series of higher highs and higher lows. If the market should break the most recent lower high, if the market should break the most recent higher low, it has changed the direction to the downside. Let me say it again. If the market is trending down, which is making series of lower highs and lower lows, the market, for it to change its direction, it has to break the most recent level of lower high in a downtrend for it to change direction to the upside. And in an uptrend, if the market is trending on a series of higher highs and higher lows, for the market to change its direction, it has to break the most recent level of higher low. Alright, that's to break the most recent level of higher low. So now I'm just going to talk about market structure for now. There's still more, which is area of values and there's still more, which is area of value and stuff like that. There's still a lot to learn. I'm just going to do this. Let's mix my chart. So this is for the downtrend, and this thing, this explanation I did for in a downtrend is applicable to an uptrend too. Very, very, very applicable to an uptrend. Alright. So I hope you guys understand and enjoy this video. So follow, like, and subscribe to my YouTube channel for watching for more information from the knowledge about forex. Yes, I'm interested in teaching people forex. Yeah. I'm interested in passing the knowledge. Let me say that I'm interested in passing the knowledge down to people because forex industry is very, very interesting. Though it's very risky, very, very risky, very risky, it's interesting. Right, because I love risky things. So guys, don't forget to like and share this video. Subscribe to my YouTube channel for more videos to drop in. So I hope you guys enjoy the rest of the day. This is once again Imperial Ethics. Alright, bye. Let's see the subscribe to my video, guys. This on GBP. So I have a lot of currencies here. I have a lot of currencies here, but let's go to BUSD for today. Alright.